We'd like to thank each and every one of you for being here today. We're excited to kick off the first training of a four-part series with Nonprofit Finance. Nonprofit Finance Fund supports community wealth and well-being through lending, consulting, and their work exists to positively influence how money flows to nonprofits. We have three trainers on the call with us today, and I'm excited to just briefly share a little bit about them. We have Emma. She is a planner and an analyzer. She helps manage both internal and client-facing work to ensure each project runs smoothly. Emma holds a Bachelor's of Arts degree in International Affairs and a minor in Global Social Entrepreneurship from Northeastern University. We're excited to have Emma on. Also, we have Sarah. Um, Sarah is an arts administrator who has focused the last 15 years on producing and managing nonprofits, arts, and culture. Their expertise includes leading mission and board formation, process and program development, strategic planning, and financial management. So welcome. We're excited to have Sarah on. And we have Marisa. At NFF, she's thrilled to have the opportunity to partner with nonprofit leaders such as yourself as you all continue doing vital work to bring about a more equitable and just world. So we are so glad to have a team that has come together and has put together a really great presentation for you all today. So at this point, I'm going to go ahead and turn it over to them, and they will dive into their presentation.
We are so excited to be here today and so thrilled to be working with all of you. And I think we're going to go ahead and get ready and share a screen. There we go. Beautiful. Like Shara mentioned, I've been working with Nonprofit Finance Fund for the last 3 years now. And prior to that, I actually was also working at a youth arts and education program. So was so excited to be a part of this work with you all, as is Sarah. They're also from an arts background, as you heard. So we have this very unique standpoint where we understand the realities of the day-to-day in the work, but that we also really are excited to share more about understanding a part that maybe we don't always have time to breathe and plan for, which is finance and financial management. So today we're starting with what we call the linking money to mission. So it's really just setting the foundation for understanding financial management terms and overall financial management health. Before we begin, Shara did a wonderful job explaining Nonprofit Finance Fund and who we are and what we do. And just as a quick little addition to that, we've been around for 40 plus years. We are ourselves a nonprofit, so we're still in that nonprofit realm. And when we work one-on-one with organizations like you or lead workshops like this, we not only share information to help organizations achieve their aspirations and their community's aspirations, we also lift up what we're learning in the sector too, because it's one thing to help build out an understanding of financial management. It's another thing to really push for systems change too, and that's what we do. Today, we really want to start off with understanding what we call the rules of nonprofit finance. So really understanding what it's like to move through, operate within the nonprofit context, because it is quite different from the for-profit world and for-profit finance. And then we also want to understand what some of those implications or limitations are and how that affects our work. Then we want to move into really starting off with the basics. So what does it mean for an organization to have overall comprehensive financial health? What are some of the terms you might encounter? What do they mean? Because we really want to set the stage for when we dive deeper into these concepts with you all. And then all along, we're going to be talking about when you're looking at certain financial documents, when you're engaging with certain financial concepts, where do you need to look? What should you be looking for? What kinds of questions should you be asking yourself, and why? Right? What is it helping you understand? What's the so what for your organization? So that's what we're hoping to do today. But before we get into it, we want to start with a warm up. We want to just gauge how everyone's feeling. We have this range of emojis, certainly not capturing the full range of human emotion. But go ahead, drop in the chat. Are you feeling A, excited, B, good, C, neutral, D, upset, E, dizzy? I know I felt a little E, dizzy when I realized January is almost over, which is wild. So go ahead. And I'm checking the chat here. I'm seeing a lot of A's, a lot of B's, some C's, tired. That is understandable. B's, good morning, a B today. Nice, nice, nice. We see some neutrals, we see some goods, we see some excited. That's great. So this is a scale we're going to use for the rest of our exercise today. We're going to walk through looking at some images and some words, and we're going to use this scale to just see, how does it make you feel? What comes up for you when you see these images? So we'll start here with this image. How does this image make you feel? A, excited. Yes, a lot of excited. B, A, C, C, neutral. You know, I also felt neutral because I said it's colder in LA today. Great. B, C, some neutral, some excited. Sleepy. I like that one. Yes, let's break away from the scale. Let's talk about how it makes us feel. Wonderful, wonderful. Great. Not an ice cream fan. That is valid. Wonderful. Okay. So the next image we're going to look at is this and the word budget. When you see this and the word budget, how does that make you feel using this scale? Oh, we went to a different one. All right. We saw budget, but now we're seeing this more soothing image. Sorry, my keyboard was too excited. It was feeling A. How do we feel when we see this image, this stream, this vegetation? It looks like it's spring, maybe summer. All right, we're seeing a lot of A's and B's. Great, great, great. All right. So now profits. How does this make us feel along this scale? CAB, CAB, E, we see dizzy. C, we're seeing a really wide range. Okay, now we have this next one. How do we feel when we see this image? We have a lot of dizzies. We have a lot of E's, E, B's. We have good. I think I saw an excited. We have upset, dizzy, neutral. Okay, still seeing the range of emotional responses. And finally, reports. How do we feel when we see reports? Some upsets, some neutrals, some goods, some dizzies, some goods, some exciteds, some goods, some neutrals. All right.
For that.
And now, our state flower. How do we feel when we see our state flower? We see some bees. Ah, I love nature. I see in the chat. A's, B's, A's, B's. A lot of A's and B's. It's around the corner. They're going to be blooming in, I think, February, March, which is very exciting. All right. So as we can see, we had a lot of different emotions, a lot of feelings come up, especially when we were dropping into talking about a part of our work that we do, reporting, Excel spreadsheets, profits, revenue, finances. And the reality is that for those types of concepts and terms and work that we need to do, we really do see the wide range of emotions and all of those feelings that come up, even down to dizzy. Those are valid, those are accepted, those are understandable. And at Nonprofit Finance Fund, we know that when we talk about concepts like this, everyone's bringing their own personal lived experiences and histories and feelings to the table. So we want to make sure that we just say right at the front that we honor that and we respect that. And all of the things that come up when we talk about it, they are welcomed. And we really want to invite in questions, and we want to invite in how it's making you feel. Because again, like I said, we know it's just everyone comes to the table with a different set of experiences around that. So now that we're a little more warmed up, we're sensing how we're feeling, we're welcoming in all of those responses and feelings and questions into the space. I'm going to hand it over to my colleague, Sarah, and they are going to walk us through, understanding the challenges of nonprofit finance, understanding, the sector that we move through.
Thanks, Marisa. And thanks to all of you for participating in that with us. Like Marisa said, we understand that there's a lot of people bringing a lot of different feelings in today, and we feel that it's important to just admit right out the gate that finance is sometimes not the funnest thing to do. So kind of with that in mind, the first thing I want to do is spend a little bit of time talking about some of the challenges that organizations like yours, and frankly like ours as a nonprofit, that we all face in this sector together. So then we'll get into what we want to share about finance specifically. So to frame how to talk about some of the realities of nonprofit finance, I'm actually first going to talk about for-profit finance. So for-profit companies and nonprofit companies have very different rules that characterize our sectors. And first and foremost, the for-profit world is set up to the advantage of the business owner, and consumers play their role in that system. So you have a company that develops whatever they're selling, and then they decide what they think a customer will pay. And then they decide also what they do with the customer's money once they get it. So the company makes a product, they set their price, you decide if that product is worth your money, if it's worth that much to you, you want to get it. If it is, you give the company your money, you get the product. This is a single payer system. And, I know there's a lot of things about the market and a lot of, other realities about capitalism, but there are not a lot of players in the actual transaction other than the company and the customer revolving the money and the product around. So to put this in a kind of real life example, I want to ask you to raise your hands because I know you're not all on camera, but think to the last time you went to a coffee shop and you were standing in line waiting to buy your coffee. You were probably thinking about things like, how much caffeine do I need right now? How big a cup am I going to get? Do I want a certain flavor? Do I want cream in it, or steamed milk, or chocolate? You might have also been thinking, how much money would I like to spend today on my coffee? I'm gonna guess on the list of thoughts that you've had, if any of those, were not things like, well, I want to make this decision to get this coffee shop or give this coffee shop money based on what they're going to use that money for. They make coffee, you want coffee, you give them the money, they give you the coffee. This is pretty straightforward. But the actual coffee you are paying for does not typically account for the entire cost for the business to give you that coffee. The coffee part of the drink, and here in this little diagram, you can see, I know it's very small, but the coffee and the milk together, that part costs the shop maybe 52 cents, just in this example. The rest of what you pay for goes towards a lot of other types of expenses that the business can incur, like direct costs like the cup, the lid, the rent they pay in their building, what they're paying their barista that gives you the coffee, or it goes to overhead and profit. And the business gets to decide how that's quantified. They get to decide how they value their time, how they value their ideas, and what level of profit they want or what they need is something they decide for themselves. It's entirely up to them, and is fundamentally understood that that's just part of owning a business. You get to dictate your own profit. For nonprofits, the system is less straightforward. So first, we want to mention that a donor or a foundation can decide to restrict funding based on what a nonprofit might use their funding for or when. So that would be like you going to the coffee shop and saying, yes, I would like to buy your coffee, but when I give you my money, you can't use any of it to pay that barista, or you can't use it to pay your rent. Or you say, oh, I'll give you $10 for this coffee drink today, but you can use 5 of it now. You have to wait till next year to use the other 5. which sounds pretty ridiculous in that context. But funders use things called the overhead ratio and other ratios like that to assess nonprofits' value or their efficiency. That means that they're taking things like administrative expenses, fundraising expenses, things that aren't related directly to their programming or their mission, and they're dividing that by the total expense of the nonprofit to say, well, a low overhead ratio demonstrates supposedly that an organization is spending most of its money on its mission instead of its overhead. But the truth, as I'm sure you all know, all organizations have different overhead requirements. You have different ways of allocating your costs, different contexts that you work within, different ways your mission functions. So as you can see, our little nonprofit CEO is very sad by all the tangled webs that those restrictions can weave. So the nonprofit sector, also on top of those restrictions, is not a single payer system. So the person who buys the service from a nonprofit is not always the same as the person who receives the benefit. So, we had our customer, our company before. Now the feedback loop gets broken for the nonprofit to cover their costs. So when you work in service of a mission, you don't usually or really ever not often expect the people who are being served by that mission to really cover paying for that service. Maybe some part of it, but there's usually or almost always a need for a third party to step in and subsidize the rest. So a funder will donate or lend whatever portion your organization needs that your customer or your service base can't pay. So it's important to keep in mind that in the nonprofit sector, we operate two businesses. You've got your mission and your subsidy. So your mission work is what your programs are, what services you provide. That's the reason you're a nonprofit. But the subsidy work is all of that fundraising, all the grant writing, all those methods and those strategies that you might pursue to support the cost of mission work, beyond what is supported by the people that you serve in the mission. So the structure is this way because nonprofits are built to undertake activities that just don't carry a market demand. You're not meeting a need that you can sell for a profit. And finally, because of that kind of lack of market demand, sort of in that capitalist way, a nonprofit business will just always be a money-losing proposition. Programs are not often commercially viable. So nonprofits serve communities that maybe lack the ability to pay, or they take risks that for-profit companies wouldn't ever take, or maybe they provide services that the government doesn't have the capacity to handle. But frustratingly, in our society in general, there's really a reluctance to pay, and I'm sure you're all feeling this, to pay for what it really costs to deliver on a mission. And funders just don't historically trust nonprofits to take donated funds and use them as they see fit. They put those limits and those restrictions on all the money that they give. They discourage financial practices that are actually very sound, like building a surplus and paying your staff fairly. I'm sure some of you can sympathize. A lot in the nonprofit sector think, just give me that coffee for free. But let's talk for a moment about profit specifically. Because remember, with a for-profit business to cover its costs, it will look for customers who almost always represent the total of the company's income. They're just providing all of those dollars to get the company all the way to covering its cost. Now, your nonprofit might get some of your income from your customers or your service base in the form of direct fees, things like ticket sales if you have them, or service fees if you use them. But that rarely, if ever, gets a nonprofit all the way to covering its costs. And I mentioned before that all nonprofits will almost always have to seek subsidy revenues. You apply for grants, you seek donations. Maybe you might run an organization that has a thrift shop, or you do merchandise, those kinds of strategies. And I want to point out too that this setup kind of requires your employees not only have the skills that relate to whatever your mission is, but that they also have skills in writing, relationship management, communications, database building, retail, advertising, all these things that probably don't have a lot to do with your mission at all. And another complication is, say your nonprofit wants to add a new program. You can expect expenses to grow when you do more work, but what you can't expect or predict is how much income will come kind of naturally flowing along with that new work. For a for-profit business, a new product means new customers, which means new products or new profits from all that new demand. But for a nonprofit, a new program doesn't automatically cover its own costs of adding that program. You might have to increase how much you fundraise, how much time you spend, how much of your resources are allocated to that work. So those two businesses we talked about, you've got your mission and your subsidy, both of them have to grow. So you might notice that we're still not quite at the top. A lot of nonprofits also have to engage in what we call cost reduction strategies. They'll use unpaid staff hours or underpaid staff, or you use or volunteers to do important work. Nonprofits might use strategies like deferring raises or not rehiring in vacant positions, or go years without replacing equipment. I'm sure some of you have a printer in a corner somewhere that's barely hanging on. So all of these strategies might cut cost, but they can also undermine what you're trying to achieve in your mission. So getting the revenue needed to cover costs is just not as simple for us as nonprofits as it is for for-profit businesses. And on top of everything else, not to keep piling on, but the nonprofit sector is also not immune to the plague of inequity that we see all across society, not just in our sector. And we've seen in our work that unfortunately many funders just don't fully grasp a lot of the concepts that I've already discussed. Grants don't go consistently to communities that may need them the most. And not every part of our nonprofit sector, not all the work is equally funded. And this is along some lines that I'm sure are familiar to some of the people here. So I can say some grant makers are starting to understand the importance of ways of building financial resiliency for nonprofits. And they're also they're beginning to understand how equity in nonprofit giving, equity in philanthropy is a social justice issue. But we certainly recognize that there's still a really long road ahead for all of us.
Well, that's good.
Good. So before we move into some nitty-gritty kind of finance stuff, I do want to do a little pop quiz. So find your chat button again, and I'm going to pose 4 true or false statements. So get ready to type true or false to each of these on which one you think is true and false. So first one, if you are a nonprofit and you're serving to your community, that means you are not allowed to have a profit. So true or false? See, false, 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 false. I'm getting the sense that most people think this is false. I saw maybe one little lonely true, couple trues. So false. The name not for profit is just a part of what makes up our tax code. This is not a rule. This is just a name that is designating organizations as charities. Now, what that literally means is that you agree when you run a nonprofit that no individual or set of individuals, group of individuals will personally profit off of the activities of the charity. So an organization can build the profit and then reinvest it back into itself. The profit flows back into the organization, which is sound business practice, but no person or private group can take those profits for themselves. Second question, true or false? If a funder is using an overhead ratio, that is measuring that organization's value. It's a good way to see if that organization does good work. True or false? It's false, false. See one little T. False, not sure. Okay. Okay. We believe that that is false. That is measuring something. It is measuring the use of particular dollars, but I wouldn't say that it goes towards measuring value. There are lots of ways that an organization might approach their overhead, and having a high overhead does not automatically mean that they aren't spending enough money on their mission. In fact, it could mean that they're making really meaningful investments into that work and making all their mission work a lot stronger. Okay, number 3. Nonprofits can be self-sufficient. So this is a tricky one. And if you think a nonprofit can eventually make enough money via the work that it does that it won't ever have to have any third party involved. Okay, so some mixed answers to this one, which is understandable. It feels possible. It feels like something we want to strive for, but really that isn't the way that our sector works. So fundamentally, as nonprofits, this is a structural reality that subsidy that I mentioned, where you're getting donations, you're writing grants, you have someone else who's contributing to the work that you do, that will almost always be necessary. And I say almost because eventually it's possible that an organization could, I suppose, work its way into some reality where that's not true, but you would stop being a nonprofit at that point. If you're meeting a need that is being fulfilled by your mission, that inherently means that you have to have some kind of subsidy to support that work, because you can't expect the people who are being served by your mission to compensate you enough to provide that mission for the long term. So, and feel free to be dropping questions if anything I'm saying needs more elaboration, because we're watching that as well. So the last one, before we move on, true or false? All nonprofits operate on a level playing field. So everyone is treated the same. All nonprofits get the same opportunities, no matter what kind of nonprofit you are, no matter who leads it. Yeah, I didn't think you'd fall for that one. So that is false. There are lots of barriers in place that serve a status quo that keeps a lot of people from succeeding equitably. And at NFF, we really try to look out for those barriers and name them. And we work with our nonprofits to challenge assumptions about nonprofit work. And then also hopefully fight a lot of racist norms and policies, and hopefully make the sector better for it. So, okay, great work, everyone, on the quiz. I appreciate you going along with me on that. And we're going to pause for a minute because I know we just talked about a whole lot of stuff, and we're going to talk about more stuff in a second. So let's take a moment to reflect. And we developed some questions that we'd be really grateful if you'd consider. And I think in no particular order, we can you can respond if you're more comfortable responding in writing in the chat, or you can feel free to come off mute and kind of pick one of these that you feel like you want to reflect on. And I'll read them out just in case anybody is on a phone or something that makes it hard to see the screen. But first, what about the rules? And we say rules lightly or loosely, I suppose. What about the rules of nonprofit finance resonates with you? What might have kind of hit a chord? Where have you encountered some of these dynamics in your work? So what moments might you have come across some of these barriers or frustrations? And then we're really interested, what strategies or tools or resources have helped you navigate through these or challenge these inequitable dynamics? So what has worked for you to get past some of these? So I'll give people a second to think about that. Any thoughts?
I've actually got a comment, specifically for like what strategies, tools, and or resources have helped you navigate through the challenges, these inequitable dynamics.
Great.
So, I mean, one of the things that really helps, especially when trying to kind of like unpack how a nonprofit works. Oh, and sorry, this is Freddie with Heal Project over in Visalia.
Thanks.
But one of the things that really helps me at least get some buy-in from the team, and then also kind of unpack how a nonprofit works, is being that nonprofits can work very transparently. So you see the numbers on like a sheet of paper, you kind of like delegate or rather allocate the funds where they should go for the year. And it's a very equitable system in the sense that you're able to kind of like unpack these things for the other team members to then apply as they move up in the nonprofit sector if they choose to do so.
Yeah. Yeah, so sharing information about things, making sure that everyone understands the finances, but I'm sure also a lot of the other systems that are kind of part of your operations. Yeah. I love that. We talk a lot in our work about making sure that communication is very open on all teams and all with all groups, with your board, with your staff, with your donors. Oh, I see some stuff coming into the chat too. Thank you, Freddie, for sharing that as well. building relationships is mentioned in the chat about question 3 as a strategy.
I wanted to chime in and kind of
Yeah,
say,
please.
basically, one of the things that resonated with me was the fact that there is this earned income venture component of nonprofit work, but it's always like really obscure and super blurry about how that interacts with the mission of the nonprofit, how much of that can be done without looking like an LLC model. There's like interactions with schools and stuff that one can get where schools are paying PO numbers to the nonprofit for. They're maybe not paying as much as they could get out in the secular world for the same level of talks and assemblies and stuff. But just that really hit me because I'm like, man, I wish that was more clear about how this earned income aspect of nonprofit work really happens.
I'm sure you're not the only one that wishes that was more clear. Yeah, there's a lot of very complicated rules around limits on what type of income you can get as extra earned income and a lot of tax implications. It is really complex. That's really, really true. And yeah, I think you're right that kind of in the same vein, a lot of strategies are difficult for nonprofits to identify around earned income or ways of approaching that. And there's not a lot of good guidance. Thank you for sharing that. I see some more activity in the chat. I don't have my eyes on that screen.
Oh yeah, happy to lift it up for you, Sarah. I'm hearing,
Yeah, thank you.
Having to comply with funders' policies, it helps prudence, but some policies can be burdensome. Fund tracking, report deadlines helps in some skills, especially around development and skills development. Also some thanks for sharing the knowledge so they can be better managing from Kika.
I see some great comments about working with funders. Yeah. Marisa, you want to pick one out?
Yeah, I think we're both seeing the
I know,
same
we're
ones.
like
Yeah.
reading them.
We're like, yes. End up tailoring knowledge or language to the funders. Some moralistic foundations don't want to hear that we have a focus on gender neutral and non-binary youth, and some do. And then a great question here. Are there rules for nonprofit finance for people who already know how they work?
By Tom William Victor 199 by Tom William Victor.
Daniel, can you help me by restating the question a little more with what you're hoping to understand?
Yeah.
Thank you.
I'm
Fun
pretty
avatar.
much, yeah, thank you. I'm pretty much asking, so like, are these rules for people who are like familiar with like how the nonprofit is like already like situated? Because for like an individual like me, I'm like fairly new to this field and understanding all the stuff that comes with it. Like, you get what I'm trying to say? Sorry.
No, it's okay. Yeah, I think so.
Okay.
And I do want to stress when we say rules, it's more, we're talking about things that are more like norms. Like the structure that we're working within is set up in a very particular way. So when you form a nonprofit, they're just realities and they feel like rules. But that's why we sort of put it in air quotes is that they feel that way because there are limits on what we can do based on the sort of tax and law implications of a lot of our activity. But then there's also just attitudes and sort of traditions almost about the ways that nonprofits are treated, especially by people who have money that want to give to nonprofits. There are attitudes in place that make that relationship kind of function in a very specific way. So they act like rules, but they aren't really necessarily always for legitimate reasons, for lack of a better way to put it. Does that make sense?
Yeah, so this is just from my understanding, correct me if I'm wrong, this is just the blueprint of how everything has a system, and for when it comes to nonprofit organizations, this is just a typical system that's played through it for things to like work.
Yeah, but sometimes in a problematic way. So sometimes the system doesn't really work. And I think that's what we're trying to point out is that there are a lot of things in place, like, and you say you're sort of new to nonprofit work. You will come through, if you work with nonprofits for a while, you'll come to recognize these. You'll see them over and over again. And you'll say, oh, I remember hearing about that. And now I'm like watching it happen. And so they're just, they're things that like, when you are working in the sector for a long time, you come to understand the dynamics at play, if that makes sense. And so some of them are for reasons that like I said, have to do with the way that nonprofits are set up with our government, but more often than not, they're things that we in fact would encourage you to fight against. So we're sort of commiserating as nonprofits with you about this. But it is also an encouragement to think more critically about these moments when someone says, actually, I want to give you this money, but I only want you to use it on this one thing. And to have a conversation with that person about, well, actually, it might serve our mission better if we could use that to pay our light bill, if we could use that to pay our staff. And you can create a new reality for nonprofits by having those conversations, which is hard. I see a hand up though. Amy?
Good morning, Amy.
Good morning. Thank you.
Good morning, Sarah. Yeah, I think piggybacking on that question is there one place to go? So like we've been in nonprofit 25 years, but we didn't really have great modeling from our admin. So we're like taking webinars on the IRS website, looking, like someone mentioned, scrolling through the internet. But like, where is there one place where we should be going and checking the boxes? And for me, like I said, the most comprehensive thing I found is the IRS website.
To find out, like checking boxes on
right,
what you need to do and those kinds of things.
Yeah, that's another resource that you can share.
Well, our website is great. As a shameless plug, we do have a lot of informational kind of articles and blog posts and some templates for things and tools for things. I will say that a lot of nonprofit like the actual rules, like the protocol, like what you have to do, what you have to submit, that's pretty state-based. So also check with your states. Usually it's your Secretary of State's office, and they might have a website that includes some sort of like items. My own state, Arkansas, is not necessarily the best in terms of sharing that information, but I know all states are different, and California might be more on top of this. Marisa, you'll have to tell me if that's true. But yeah, and Marisa, please do also chime in if you've got other places where that people should look for good resources. There are a lot of
what is that website that you guys have?
Our website, actually, Emma just dropped it in the chat. So if you have access to that box, it's in there right now. But our overall website is just nff.org. So
thank you.
Yeah, I was going to add to that, California State's Attorney General Office. And then there's a few other organizations that help round out understanding that sort of compliance piece, which I think is really helpful. And also, if you have access to either on staff or as a contracted person or as like a volunteer, bookkeepers and accountants that can help you understand what's needed in terms of overall compliance when you're, getting ready to report, filling out the 990. And I would say that like what we're hoping to do too is to help you see how there's the compliance piece and then there's what it means in terms of your internal financial management. So there's what you have to report out, but then there's also what that means for how you operate and how you track your information. And I saw there was one other hand too.
I think I see two. And then, I do want to make sure that we get to the rest of our content so we don't run out of time. So maybe we'll do these last two questions and then move forward. Okay. Is it Kedrian?
Yeah, hi, it's Kedrian with Classy. I just wanted to just add on to that. I am in California. I think that one of the biggest things that resonates with me about the rules of the nonprofit finance is really the insufficient and restricted funding, because like you guys were speaking to, we have the compliance thing in California. So it's, California Secretary of State, it's the Attorney General Office, and then also, which has been it hasn't been new, but they've been more prevalent, is California Franchise Tax Board, in addition to the Internal Revenue Service. So there's all these compliances that we have to adhere to and have to understand. And even with having a CPA, like I have a great CPA, but I still have to manage and ensure that they are adhering to the compliance and filing. And then just understanding that when we're raising money or we're going for grants, like we typically in the past, we have like one way of doing it, but then it only applies to one perspective, like donations only go to direct services, not overhead. So then you got to use your resources to try to look for grants that will, supplement that cost. So that really resonates. It's an up and down challenge because you need passion to continue to fuel that energy to keep that going, but that definitely resonates the most.
Yeah, exactly. Yeah, it's a long list. We could spend the rest of the day just talking about all the things you got to be on top of. And Nathaniel, I saw you put your hand down, but I did want to give you a chance in case you had a really burning question.
Oh no, it was just a comment, but I typed it up in the chat. It was like referencing different guide websites.
Yeah, excellent. I love an active chat. So such an exciting thing to see. Okay, well, since we didn't have the second question, and Mason, I see your hand is up now. I'll let you have the second question real fast.
I actually am, it's not, I guess like.
Or comment, yeah.
Yeah,
You
it's more
shouldn't
of a
assume it's a
comment.
question. Yeah.
It can get like, I mean, we can spiral a lot into how difficult fundraising is, how difficult it is to manage grant funds and but it's possible, and so many of you guys are doing it, and we figure it out along the way. Sometimes we make mistakes, and we have really friendly auditors that we invite into our lives to help us do things better. But these are all things that are possible. They are manageable, and we're just a small organization, just learning like everyone else is. And every time we come against something, it's frustrating. But it's frustrating because we didn't know about it. And once we know about it, it's something that we can manage, and we develop policies and stuff around it. So.
Yeah, very well said. And oh my gosh, building cohorts of other nonprofits and finding your community of other leaders that you can talk to and ask questions of and share resources. That I cannot stress how wonderful it is to have peers in your nonprofit kind of world. So take advantage of things like this and share your emails if you're comfortable, and connect with each other past these webinars, because yeah, having other people who are also struggling with these things or also know where to find stuff or what website to visit, I cannot overstate the value of that. So but yeah, I'm gonna pass it back to Marisa to continue with our less depressing content that is also very informative. So thanks so much.
Thank you so much, Sarah. And I just want to echo, I don't know, my appreciation for this engagement, and especially going back to what you said, Daniel. I feel like it's really resonating for me too, because when I was a director of a volunteer program and just was always in the thick of it, but knew I was like, there's feelings I'm having about the way that I am doing the work that I just don't feel like I have a name for. And once I learned this content from NFF, I felt like now I have the words for what I'm experiencing and observing and feeling, and why sometimes my work feels amazing and why sometimes it feels really, really challenging. And so I think this is how we can, the more that we know and understand and can name these dynamics, the more we can work to change these dynamics as best we can. So I just really appreciate you talking about that, because it did feel like people had the secret codes. And so we want to make sure you don't ever feel like someone has the secret codes. First, what we're going to do as that sort of piece of, understanding financial terms and financial management and setting the foundation, we really want to talk about what we call the business model. And when we talk about the business model, we actually want to situate it within the context of what we at Nonprofit Finance Fund say is comprehensive financial health for an organization. So we see these as two interconnected pieces. In the nonprofit sector, everything flows from mission. Everything is oriented around, the work that you set out to do within your communities and the impact that you have with your communities. There's a lot of different ways that we reach our goals and serve our mission and deliver on that impact. It takes people, it takes resources, it takes skills and knowledge and know-how, and even the communities that you're in and the relationships that you're creating, and even things like this, like Sarah mentioned, this cohort. It also takes resources like money. That's a reality. We said that last because we see it as a part of everything, a part of the total picture of how you deliver on your mission and your goals. But one way that you, reach more resources is that you have what we would call a healthy business model. When we're talking about a business model, that just refers to how does your organization make money and spend money in the service of your mission? How are you able to deliver on your, what you've set out to do in the day-to-day? And typically, you can find that information on what we would call an income statement. Has a few other names, statement of activities. You're going to find that there's a lot of different terms with a lot of different names. But that income statement shows you, what did you make? What did you spend? What was left over? And we're going to talk about that in more detail too, because there's more to unpack. As Sarah mentioned, we believe that organizations, it's not enough to just break even. We want to be generating consistent surpluses. So we're looking at this in sort of like the ideal world. As an organization is continuously building up those surpluses, it can then build up its resources. We're going to talk about this a lot more after I'm done. But your resources go into building out what we would call your capital structure. And just so you have this in mind, your capital structure just refers to what does your organization own? What does your organization owe? And what does it have left over free and clear of your obligations and what you owe? Those resources that you keep building up, the things that you own free and clear of your liabilities, they end up, or what you owe, they end up supporting you in reinvesting back into the strength of your business model. You can buy those laptops you really need. You can get stronger Wi-Fi. You can make sure you replace that clunker printer. But you can also build up resources to one day expand your program sustainably, or navigate through any major changes. We saw a lot of organizations say, we really want to focus on building up resources after we've been through the ringer of the last 4 now years, right, with the COVID-19 outbreak. So you can see that it becomes this positive feedback loop, right? The more you're building up and your resources, the more you're investing into your business model, the stronger your business model, the more consistently you're generating the surpluses, the more you're building up those resources, and so on and so forth. So like I said, the business model, that is just a reference to how your organization makes money and spends money in service of its mission in that day-to-day. There's some more terms that we're going to unpack. First, we want to start with the income statement. That can also be referred to as your statement of activities, like I said. You might also be really familiar with your profit and loss. And this is the information that you can find on an income statement. We're going to walk through it, and we're going to talk about the different categories and terms as we go. So first, you'll always see your revenue. And like we talked about earlier, revenue has more detail within it. So oftentimes organizations have a mix. They can have earned revenue, and that's money that you make in service of providing, or in return for providing a service or a good. So that can be membership fees. If you're a performing arts organization, that can be ticket sales. The organization I was previously at sold books, students' books, and those profits went back into supporting our organization. And that can be program service fees. So really, anytime you're providing that good or service. And like Sarah mentioned, oftentimes that's provided at a much lower cost. And so because of that, we see a mix of earned and contributed revenue. And contributed revenue, that's anything that you receive in support of your mission from, excited supporters. So you can get individual donations, corporate contributions and sponsorships. It can look like all the ticket sales and the revenue that you raise at a gala. And it can also look like a grant with a foundation or a philanthropic institution. It might seem really obvious, but honestly, we find that sometimes it's helpful to name the obvious. When you're looking at your revenue, it's really helpful to ask, where does the money come from? Because understanding where your money comes from, whether or not it's earned or contributed, understanding the source of the revenue, if it's a philanthropic entity versus a corporation versus an individual, that really helps you understand what are the resources needed in order to continue stewarding these types of revenue. Another question that comes up is, how many revenue streams do you need? Or put another way, how many revenue streams is sustainable, right? Because as we mentioned, when you're adding a new revenue stream, that's a whole new line of business, right? It's one of those subsidy businesses. So you don't just add it in a vacuum. You end up, let's say you're pursuing more foundation grants. Now that means you're looking at a grant writer. Now that means you're looking at a development manager, right? So there's always attendant expenses to consider. The next piece is your operating expenses, and those are broken out into categories that you'll typically see on an income statement. So we have here personnel, that's your part-time and your full-time staff in service of your mission. We have contractors and professional fees, so that's if you have contracted educators, performers, artists, teaching artists. That could also include speakers' fees, any kind of consultants that you have, your accountant, your bookkeeper, if you have legal support, that would be under contractors and professional fees. Occupancy, also pretty straightforward. That's referring to any kind of ongoing expense related to your space. So if you have rent, if you have a mortgage, if you have furniture that you're purchasing and any kind of equipment that you're renting or investing in, that would be under occupancy. And then there's a catch-all phrase that we use that we call support expenses. It might look like other than personnel expenses. It could look like a few different things on your income statement. But what that's referring to is literally everything else. So what do you need for your programs? What do you need for your supplies? Database payment services, things like that. So truly a catch-all, but there's obviously more detail within it. And again, questions to ask, really starting with the basics. How do you spend your money? Oftentimes we like to see, what is our largest expense? Why is that the case? You can also ask, is there any kind of fluctuation that we see with our expenses? And then you want to say, do our expenses reflect how we achieve our mission? What are the resources that we need, and are we spending money on those resources? So for instance, we often see that organizations that are doing human services, they have a lot of people. They have a very large personnel line item, and that makes sense because they have social workers out in the field, they have caseworkers, it's really aligned with, this is what we need to do, and these are the people that we need to make it happen. Then finally, we have what's called the operating surplus or deficit. You might see this as the operating results on your income statement. It might also say net income. And what that means is your revenue minus your expenses. Simple as that. And what's left over. So if it's zero, that's considered break even. If you had enough revenue to cover your expenses and then you have some left over, that's a surplus. And if you didn't have enough revenue to cover your expenses, you'd see that reflected as a negative number, and that would be considered a deficit. So the question you can ask is, were our costs covered? Were we able to meet our obligations and cover our expenses? And then if you have a surplus, is it enough left over so that we can start building up our savings? What can we do? How can we responsibly steward, what we have left over? So that's unpacking the income statement. And we're going to talk a lot more in detail about it in our next session around financial management concepts, part 1. But we wanted to make sure that we provided that information so that you really have an understanding of the absolute foundational piece of understanding your business model. Like we've continued to talk about all throughout, there's still more nuance to unpack. We've been talking about this already, and I want to thank you all for sharing about this, because I think you're going to understand this so well immediately. It's a lived experience we all have, which is that in addition to revenue being either earned or contributed and coming from a variety of sources, it also flows differently through the organization, depending on whether or not it's restricted or unrestricted, or it's without restrictions or with restrictions. We love to use this bucket metaphor to really illustrate how this works. So revenue can come into an organization without restrictions. Typically, earned revenue is without restrictions. And then we see that sometimes contributed revenue is without restrictions, oftentimes individual donations, or what we would call general operating support grants, meaning the funder has said, or the supporter has said, use this how you see fit, go forth. And that's flowing into that without restrictions bucket. On the other hand, on this other side of the screen, we have revenue with restrictions. And a lot of times, organizations receive grants or contracts where they are restricted to either a particular timing, that's one of the very common restrictions that we see, or purpose, that's the other really common restriction that we see. So what does that mean? Timing restriction looks like, let's say you've received a 100K grant. Hooray. But it's a 2-year grant, and the funder says, we're going to give you 50K in 1 year, and we're going to give you 50K in the other year, and you need to spend all of it by Y date, right? That would be a timing restriction, right? You have a time frame imposed on it, and they're dispersing it on a particular timeline. The other type of restriction that we see is purpose. And so purpose is, they're only giving you funding for a particular type of program or activity, and you need to fulfill spending on that program or that activity in order for you to be able to access that funding. Oftentimes, we also see that even within that, the contract might say, it's tied to this particular program or activity, and you can only spend X% on people or administrative costs, right? So that's the two different main buckets, without restrictions and with restrictions. We want to show then, as we zoom out, what that means for how money flows through an organization, right? So you can see over here on the left hand of my screen that earned and contributed money flowing into the without restrictions bucket here can now flow freely into covering expenses, right? An organization can use it as it sees fit. You're covering all of your needs. Over here in the with restrictions bucket, right? It's closed off by this valve. Now, if you fulfill that timing or that purpose, then we can turn this valve and the money can flow into the without restrictions bucket, and now you can use it for the specified expenses, right? So that's just a technical term that you'll see on the document. That's what it means. You fulfilled your obligations, and now the funding is available. What this means is that oftentimes organizations, if they have a mix of without restrictions and with restrictions, they are now tasked with tracking that funding, building out reports, making sure it's spent in the way that's allowable per the contract. And so I think that was something that we were talking about earlier, right? There's a lot of work that goes into making sure you're crafting the grant application so that it's tailored to the funder, but now you're also building out a team that has skill sets to monitor the expenses, to monitor where it's going, to make sure they're reporting effectively, right? So one, there's less flexibility oftentimes for an organization, right? If they have a lot of restricted funding or that mix, so there's less flexibility than if it was all unrestricted. And then two, there's implications for how you need to manage it within the organization, right? You need to be able to sustain that funding. One other layer of nuance we want to add in, so many terms, but you probably noticed that we were saying operating, or operating was written on this screen. And we want to define what that means, because that's another really helpful thing to make sure you understand. So when we're talking about operating activity, that's everything you need to do to keep your doors open, keep your programs running, and keep delivering on mission in the day-to-day, right? So it's everything that you need to do in the day-to-day. It's your regular, reliable, repeatable revenue that you know you can count on, that you've built systems around, that you're stewarding and bringing in, and then expenses that must be spent in order to deliver on your programs. when we talk about non-operating activity, that's that more irregular, episodic funding that comes in. It can look like a variety of things, like maybe an organization has outgrown its space and it needs to move to a new office, right? So they embark on a capital campaign to raise all the money that they need to move into that building. Hopefully that's not happening every year. So that would be considered one time, right? Because that's a lot of work. If you received any kind of relief funding for COVID, again, hopefully we don't have to go through that again. It is not that common. We would consider it episodic or non-operating. Or if you get like a one-time large irreplaceable gift you weren't expecting or a bequest, things like that, those would be considered non-operating. The reason we say we want to distinguish between the two and separate the two is because operating activities, we think, reflect your true financial performance, the true health of your business model, right? Because we don't want to be relying on something that is not very regular, not very common, quite extraordinary. And when we commingle the two, sometimes on your income statements, that can just tell a totally different story than reality, right? It could look like your organization has a huge surplus, but actually that surplus is spoken for because it's a part of your capital campaign, right? And maybe you're not planning to do the majority of those expenses until the next fiscal year. One other thing I want to note is that usually what we see when an organization has separated out its operating from its non-operating activity is we see it reflected what's called below the line. So you'll see your regular, reliable, repeatable revenue, your expenses that you need to spend in order to keep operations running and programs running, and then your surplus or your deficit or break-even results. And then below that is what's non-operating. So quick takeaways. Key questions to ask when you're looking over. It's as simple as, but sometimes not as obvious. How did you make money? How did you spend money? What was the result, right? Think through what of our revenue is restricted versus unrestricted, and how does that affect the way that we operate? If you have the opportunity to look at, 1 or 2 years side by side, maybe 3, how have you been doing over these years in comparison to each other? And just a reminder that breaking even is never enough. We believe that nonprofits really need those surpluses because that's going to help you in building up those resources to reinvest in your business model, which Sarah is going to walk us through. And I want to pause here. I know I covered a lot of new technical terms, a lot of different concepts, and just see if there's any other questions before we move on.
Yeah, I have a question. This is Frank Kelly.
Yeah, go ahead.
Excuse me. My question is because, when you said I needed the surplus part of it, because, I got into this years ago when it was like, the books are supposed to balance. You're never supposed to have a surplus. So the rules have changed.
We are hoping the rules will change. That's a great point. So again, this is where we say rules in quotes, right? So it was never actually a legal requirement for nonprofits to not have profits. It was an expectation or a standard practice that emerged from the way that the nonprofit sector operates, right? Those third-party funders are saying, well, I can only trust that you have used my money responsibly if you have 0 profits left over, because that means you've used every cent to support your people. But the reality is we know that we actually need surpluses because we need to build up resources so we can build up our savings and reserves, because we need more than just the program supplies. We need more than just the program coordinators, right? We need to be investing in the health of our organization in the long term. And so great question. That is absolutely how the sector has operated and in a lot of ways continues to operate. But our hope is that in sharing this information with you and showing that you can and should build up surpluses, because there's no legal requirement that you shouldn't, that we can also use this language to communicate with funders. Here's how we operated, and here's why we need those surpluses, right? You can contextualize it for your supporters. I hope that's helpful.
I have a question. My name is Esmeralda.
Yeah, hi, Esmeralda.
Hi, good morning. So I have a question. Yeah, if we start creating that surplus or bringing revenue in that is not from a grant, so we have to, how does that go for our taxes? Is that taxable dollars?
No. No, it is not. It just reported out. This is how we did. This is where it sits. But there are no requirements that it would then be taxed. However, I will say there is a fine-tuned distinction. So sometimes organizations have like a storefront, like I don't know, the organization I was at had a storefront where they sold supplies. That was taxed in the same way that like museum gift shops are taxed, because it's a retail store. But the revenue that you have is not taxed so long as you're fulfilling your mission and providing the services that you've committed to provide to your community. It's a great question though.
Thank you.
Mm-hmm. Oh, when we do our best, this is Kika asking, when we do our best to use funding in a way that leaves extra in our budget that is considered good money management, right? That's a really good question. I think there's a lot of different perspectives that we hear on whether or not that constitutes good financial management, but from nonprofit finance's perspective, you know, having, and correct me if I'm misunderstanding you, Kika, but are you saying like if we have a surplus, is that considered good money management? Is that what you're saying? Yes. Okay, great. We think it's supportive of good financial health. Yes. We think that when you have surpluses, you're starting to build them up consistently, that can be an indicator of strong financial health. And we're going to talk about this more in our series, but there's ways to be able to tell the story of your surplus to your funders and supporters so that they see that it's not just a surplus that's sitting there, it's a surplus with purpose and that it's supporting your organization. Yes. Any other questions? This is really great. I really like this. And I just want to also clarify that it really depends on your funder, right? Sometimes you will have funding agreements that say you can't use our funding to build up reserves. So it is something that you need to be mindful of. You know, when we use this funding, we need to be able to apply it to these particular purposes. Some other agreements will say that is allowable. And then in other instances, when you're maybe just meeting a new funder or talking to them, it's helpful to communicate why you might already have reserves. So it's tricky nuance there, but just want to make sure that we're teasing out that nuance for you. Again, we're going to be talking about that more in depth, but it's the difference between what does your agreement say, what is allowable, and what have you already built up? So how do you tell the story of that? Daniel, I see another question.
Yes. My question is understanding like all the technicalities that play into this. How does one like de-stress from this situation? Because understanding like how this is, like this sounds pretty stressful, but I know that like the win is like 100%, like you feel good, but you know, within the situation, like what are some things that people like when you're taking this route? Looks like you're done talking, so we'll lower your, oh, sorry. Yeah, that's just my question. That's it. Like, how do I like not really like get stressed out when it comes to this, because it seems like a stressful sequence, and that could also like play into how like I bring funding in or something like that, you know? I don't know.
Daniel,
Sorry.
I really appreciate you naming that. I feel like that goes right back to what we said at the beginning, right? That talking about these concepts, talking about these systems, it brings up a range of emotions. And one of them is it can feel overwhelming and it can feel stressful. So I just want to acknowledge that that is a reality of the experience. In terms of how to manage through it or how to navigate it, I will say, like, from my own lived experience, it was about having these kinds of conversations, right? Like talking about what is needed, talking about what systems would help make it more manageable, all the while acknowledging that it doesn't immediately eliminate stress. But just, I think starting the conversation is really good, and knowing that you're also, I guess for me, it was validating or comforting to know that I wasn't alone in navigating through the system like this. So that was another piece. And I just want to invite Sarah in too. I know you also have a lot of lived experience with navigating through this, so I would love to hear your thoughts on that too.
Oh yeah. big time lived experience navigating the stress of managing nonprofit finance. Because yeah, it feels, I think the thing I most want to say in response to that, like you sharing that it feels like a lot, is that it is a lot. And I frequently find myself when I'm, because I'm actually still running another nonprofit in addition to my day job here at NFF. It's very, very small and there's not a lot of activity, and we're tiny, 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 but I remind myself still, even after years of doing this, not everything has to happen all at once. And putting in place all the right systems to have some of the work almost automated, almost, kind of you've got a really good way you do things and you track things and you keep track of information, but you don't create that in one day. You don't create that all up front. It can be, okay, I identified, I need to make sure I'm on top of, just our money that goes in and out of our bank account all the time. And you find a way that you want to do that and you consistently do that and you've got that handled. And then you say, okay, but now I need to make sure that I'm, I have this new grant and I've got to deal with the report. And so you take care of that. You don't necessarily create all of that organizational work in one go. You'll find the things that you're feeling stressed about, and then you'll think, okay, is there a solution? Is there a tool I can use? And as Marisa pointed out, is there a person I can talk to about it? And more often than not, there's someone, you might turn to who's done it before, or who has a system in place, or who is super organized about everything. And you're like, okay, how do you do it? But it is not letting the forest get overwhelming and trying to focus on single trees at one time, if that makes sense. I think everybody's going to give you a different answer to that as well. Everybody has a different level of chaos they're comfortable with. And honestly, I've worked in nonprofits that were totally chaotic with zero systems in place, and we still got the work done, and it was okay at the end of the day. But I know I'm not comfortable with that level of disorganization, so I run things differently. But it really is about managing your own stress. So whatever works for you, to figure out what you need to figure out. I know it's not necessarily really helpful, but you're not alone, and everybody's got a different thing. Suki, you have a question or a comment?
I have a comment, really. So
Okay,
I know that a lot of people, I guess they're a little confused with, like, if they were to have a net profit and they're thinking that they're paying taxes on it at the end of the year. I want to reassure you that if you apply with the IRS and have nonprofit status, then you don't have to pay taxes, even if you have a net profit at the end of the year. The only taxes that you pay is sales tax. So in California, if you have sales tax, we have to, I guess, file your sales and use tax return every quarter. So you have to do that. If, for example, you sold, like, shirts, nonprofit shirts, you made income through selling tangible items, and yes, you need to file your sales and use tax return. But at the end of the year, if you have any net profits through maybe grants or contribution, then no, you don't have to pay taxes on that.
Yes, yeah, exactly. The money, the easiest way I can think of to sort of separate it out, because there are, like Suki said, there are exemptions, there are sort of outliers where there's a circumstance where you might have a more complicated situation, but money that has to do with your mission. So anything that is directly earned or given in support of the work you do that is central to the work of your mission, that is not taxable income. So it's just kind of like, okay, is this money directly supporting the work that I do, in that someone is giving it to me because I'm doing that work for them, or someone is donating it to me, or paying me for the service? That is not taxed. So yeah, it's all the direct mission related money. There are, like I said, and we don't have the time to go into all the things that might be exceptions to that, but they're small, they're minimal exceptions to that. So I wouldn't get too worried about it. But yeah, I'm watching the time and I want to make sure we get to the last section But please remember that the chat is there. We'll make sure that we're keeping an eye out. So if you have more questions or comments, and you want to put some things in there, then I'll ask my colleagues to help me out in making sure that we're addressing those. Because this last section is that other half of things. So we talked about the business model, and the other half of everything is your capital structure. Because you remember Marisa gave you this beautiful wheel where everything rolls around in the orange and the blue. And we talked about that business model side. So we're going to just scoot over real briefly and talk about the capital structure. And what we mean by capital structure is we use that term to describe, like Marisa said, what you owe and what you own. So these are your liabilities, which is what you owe, your assets, which is what you own, and then what you own outright, the difference between the two things, the net assets. So if your organization were to generate financial reports on the status of your finances at any given moment, this information about your capital structure would be on your balance sheet. And like you said, there's a million names for lots of things. Sometimes you might be called your statement of position. So the business model, like we mentioned, the model it all feeds into each other. So what you do on your business model feeds into your capital structure. If you're providing those consistent surpluses, if you're always bringing in more money than you're spending, then your capital structure will improve, because over time, your organization is going to start to own more than it owes. You'll build up sort of this health over in that part of your organization, and you can make these really important investments back into the business model. So it's sort of, like we said, goes around in a circle where, you use the things that you own, the assets you own, to make investments like a new tech systems or additional staff. You might repay debt. And it just goes around and around to build up overall health in your financial kind of world. So to talk more specifically about all of these parts of what we're talking about here on your capital structure, I want to actually use your personal finances as an example, because I think that this is something that sometimes people look at and their brain just shut off, which is how I used to be. But if you think about this in terms of your own personal finances, it can be a little easier to conceptualize. So say you get a new car and you take out a loan to pay for it over time. The car becomes an asset that you own, while your car payment is a liability that you owe. Now, let's just, for the sake of argument, say you don't own or owe anything else. So the difference between the value of the car and the amount of your loan, that difference would make up your net assets. So that translates to how much of the car you own outright, how much has been paid off. That's your equity. So your organization might have assets that are like cars, like you might in fact have cars or vans, but you might have property or equipment. Those are assets. You probably have cash. So that's just your money in the bank. And then you might have receivables. Those are payments that are owed from other people to your organization. And then some people have investments. So that's another asset that we often see. And then your liabilities, you often have payables, and that's all your bills. So you owe people some stuff that you got to pay. It's usually, in the next month or two. And then you might have debt. So you might have a mortgage, or you've got a line of credit. And then some organizations also have something called deferred revenue. This is more common in our world over in the corner where we do art stuff, because you sell tickets, but you haven't done the thing yet. So people have given you the money for a service that has yet to be provided. That's deferred revenue. You've got to hang on to it in a particular way. So the difference between your assets and your liabilities is your net assets. That's what the difference between what you own and what you owe. Sometimes this is referred to as your net worth. And just like everything else, this can get complicated, because sometimes some of these net assets might be restricted. Again, that means a donor has imposed restrictions on how or when you can use their money. And maybe that's program specific. Maybe it's tied up to what you have in your endowment. Maybe you're putting away that money and you can't touch it again. Some of your organizations may only have unrestricted net assets. Now that means that no donor has said you can't, use this and this, you have to use this in a certain way. But sometimes that can be like an operating reserve, which is internally you say, well, we're going to agree for ourselves to use this in a certain way. And that can be like a rainy day fund. Those aren't restricted, but you still you're still sort of deciding you use it a certain way. But even in all of those unrestricted net assets, so no donor restrictions, no rules around what you can spend it on or when, not all of that money may be liquid or available. So these two concepts, liquidity and availability within your net assets, that we really look at those to show us information about an organization's really true safety net. So, you've got assets, you have things that are resources available to you, but are they really available to you? Can you really use them? So let's talk about liquidity first. And this is just our way of identifying how much money you have to cover day-to-day expenses like paying staff, paying your bills. But it's also about dealing with unforeseen circumstances. So liquid net assets or cash on hand can help you if something you need for your work breaks, or if a weather disaster, which we have more frequently now, causes damage to your building or maybe ruins your programming plans. So when we're looking for good liquidity, we will ask, is there enough cash on hand to operate smoothly, even in a time of crisis, considering how much your organization regularly spends? So we're looking at your expenses and examining how much cash you've got to handle everything. But it does get more complicated again, because when we talk about having cash on hand, it isn't always available. So even if it's liquid cash, or if it could be liquid cash, it might not be available to you. So obviously, we've talked a lot about restrictions. That's a huge way that cash becomes unavailable, because it might be money in your bank. It might be actually cash, but maybe it's waiting to be used when the money is released from restrictions based on, that grant is for next year or that grant is for a particular program. So it isn't really available to you until that thing happens or until that time. So it has to be saved. And so we can't pull that out, and we can't use it when we need cash to deal with our day-to-day reality. So in addition, on top of restrictions, when we mentioned that you might have like equity in your property or equipment, and do you remember I mentioned the car and you have equity on what you've already paid. So that's like, what you own outright. That's an unrestricted net asset, the equity in your property. But even if that's your money, technically with no strings attached, you'd have to sell that asset to get that to be cash. So it isn't really practical to think to yourself, well, we have all this value tied up in our building, so let's just sell it, get the cash, and then we can pay the light bill. The light bill only matters if you have the building, so you can't sell it to get the cash to deal with the thing. So it isn't available money, even if it is a resource or a value area for you. So how these concepts play out in the whole picture, going back to this graphic that Marisa used earlier when we were talking just about revenue, this is the same idea here in your net assets. So we're just going to kind of use the same concept to look at it in this specific way. Again, the water is your money. The water is your money that you can use for whatever you want. The upper bucket, though, is where it's restricted. It's got that pipe it's got to go through. You got to do the little wheel to release it out when you're allowed. And then some of you might have endowments, or you might know an organization that has an endowment. That's where we are representing it with gold bars. Those look very fancy. They feel really great to have a bunch of gold bars, but gold is very difficult to turn into water, if you might know. So the lower bucket on the left is your unrestricted, undesignated net assets. This is liquid water. It's just going to flow right out of that spigot onto your expenses. It's going to grow all your nice carrots. This money is not restricted by donors. It's not invested in the building. That's the water that's in that bucket. It's your most valuable money. This is the money that just flows without barriers. But we know that there are a lot of things in that water that are floating around in there that are factors that affect whether all of the water that's available to you that exists is actually liquid and is actually there for use. So the ice that's in there, we're using to represent receivables. This is the next best thing to cash, because obviously it's going to become cash pretty quickly. Somebody's going to pay that bill. They're going to give you the money they owe you. You'll have it in the bank. The water bottle represents the same water that's in the bucket, but it's restricted internally by your board. So that might be your designated reserve, might be the rainy day fund I mentioned. All you got to do is just ask the board, hey, can we open the water bottle and pour it out? But it's still a step before you can actually use it. And then some of you might own a building. That's those bricks that are in the bucket. You can't turn bricks into water. You're not going to sell your building to cover your expenses. So it's not really available money for you to use. So even if you have a really big unrestricted net assets bucket, you can still feel constrained on how and when all of that money can actually be used to do your work, which can be frustrating. So we have a couple of like wrap-up slides, but I'm going to actually just show you what's on them instead of talking you through them, because again, you're going to get all this information afterwards. The slides are correct, Marisa, we're disseminating all the slides. You're going to get the recording. So I'm going to leave the wrap-up slides for you to review on your own, because I want to check if anybody, I see a hand up. I want to make sure there's nothing in the chat that we're missing. So if we want to spend the last couple of minutes in discussion, I'll leave it here for just 1 second, and then I'm going to go to the next slide and we can talk, because this is some reminders on this slide that I think are good. Okay. So yes, Suki, do you have another comment or a question you'd like to add?
I have a questions. For the EYC grant that we received, do you suggest that we record it under deferred revenue or endowment? Like, what do you suggest?
Do we have our EYC friends here with us still?
Yeah, I'm on.
Hey,
that's a good
great.
question. I mean, it is a program, like you received a grant, so it wouldn't be an endowment. I'm not sure where all the options are, but it is a grant or a subcontract.
I'm just wondering if it's safe for us to record it under like a deferred revenue, which is a liability, and then every month once we have the expense for it, then we'll move it over.
Oh, gotcha. This might be a question back to NFF. I can tell you the structure of the award. So upon the completion or the execution of the contract and securing insurance, partners receive their first payment. So our partners are either they either have a 3-year award, a 2.5-year award, or 2-year and 9-month award, and so they will receive 3 payments. They receive their first upon execution of the contract and insurance requirements within the first few months, so not right before they begin the work, but it is pretty quickly afterwards. And then they receive subsequent payments in year 2 and in at the end of at the beginning of year 2 and at the beginning of the start of the 3rd year, after they've submitted their requirements and then we've approved them. So I feel like this is like a mixture of a question between when they receive payment and then also like they're gonna, as long as they're fulfilling it. So I'll punt that back to you on how it should be reported.
Yeah, thank you, Shara. I appreciate that. Yeah, I think this is, again, you're going to hear us say, like, ultimately, we're not accountants, so we would love to recommend that you talk to a bookkeeper, an accountant, if you're connected to them or working with one already. And in that vein, like, our understanding is that it is kind of operating a little bit like a hybrid of like a reimbursable contract, essentially. And so what we have seen is, let's say you, like you were saying, Shira, need to have like proof of having executed the contract and then you receive the payment. Some accountants, again, it kind of differs across, might consider that like a payable or I'm sorry, a receivable, in which case, like on the balance sheet, it wouldn't show up necessarily as your cash just yet, but it would show up as a receivable. So you're expecting it to come in at some point. And then once the cash is realized, like it's in the bank account, then that would be considered an asset. Is that helpful to kind of hear that distinction? Because deferred revenue is something different. That's where, you've sold maybe like a season of tickets for shows that haven't happened yet. I'm thinking of like a theater. And then let's say for any reason you have to cancel those shows, you would be liable for paying back the people who have paid in advance for those shows. So it's a little bit different, and that's why it would sit as a liability, because essentially you owe them in case you don't deliver on that promise of a show. But in your case, it's more like we have the agreement, the money is pending, so now it's sitting as a receivable. And then once it materializes in our bank account, it would be an asset.
Thank you. Appreciate it.
Yeah, absolutely.
Yeah, good explanation.
But again, talk to your accountant. Make sure you're on the same page. Make sure.
Always talk to your accountant.
Yeah.
Find an accountant. I know they're expensive, but they're so worth it. Okay, I'm keeping an eye on the time, and I think we have already kept you past what we're supposed to. But y'all are amazing, and it's been so wonderful to talk to you all. And I actually would love someone's help answering the last couple questions. I just know people were curious how the copies of the materials will be disseminated, and I can't remember if that's coming from us or from EYC. So if we can answer that last question, then I think we can feel comfortable saying goodbye for the day. But yeah, really, really appreciate the engagement and the, I know it does a little vulnerable to share a lot of this kind of stuff and to talk about our stresses and concerns and to ask questions. And it's very meaningful for us to talk with everyone and get to learn what you're dealing with and hopefully help a little bit. But yeah, thanks for coming.
Yes, thank you so much.